Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because the next few months are looking quite optimistic for Bitcoin, but I know there's a lot of disagreement and conflicting viewpoints over what's going to happen in the short term because we have price structure and current narratives saying that we should rally higher, while global liquidity and inauguration seasonality are saying we should see a deeper correction. So all we have to do is survive the volatility in the meantime, whether we rally immediately or see that deeper pullback first. But regardless, my base case is that we still have higher to go this cycle, and I'm going to go over exactly why. First and foremost, we have a very clear breakout above our range high at 100K on a weekly closing basis, which tells us that Bitcoin's most likely direction is to continue rallying higher. Every time we have seen a range breakout this cycle, Bitcoin has continued on a relatively impressive rally before seeing any type of correction. And now that we've had Trump's inauguration, we're seeing very clear signs that retail is starting to pile into this market. If we look at the Google trends for buy crypto and for Solana, we're seeing huge spikes recently ever since Trump launched his meme coin. So this is the Google trends for buy crypto. As you can see, we saw a pretty decent spike after the November election, but that is nothing compared to the spike we've seen over the past few days. And we see a very similar pattern with the buy Solana search term. We saw a spike after the election, but then a huge spike ever since Trump launched his meme coin, giving us a very clear sign that new market participants are piling into this market. We're also seeing very clear evidence of new market participants entering if we take a look at the crypto apps dominating the finance category on the US App Store. If we look at the top 6, we have 4 of those 6 apps being crypto apps and easy on-ramps for people to buy crypto, which shows us that more and more people are all of a sudden getting excited now that we have a new pro-crypto administration. We're also seeing greed starting to slowly trickle back into this market after a nice sentiment reset into the neutral region, and we're still quite a ways away from the concerning extreme greed area where Bitcoin tends to find its local tops. We also got news that the SEC is launching a crypto task force led by Hester Pierce, who has been very pro-crypto in the past, and we still have MicroStrategy buying Bitcoin and taking it off the market week after week, and we're seeing the spot ETFs doing the exact same thing as well now that we're seeing these very steady inflows. And even with all of those bullish narratives and announcements and the bullish price structure, I still named Monday's free weekly report Navigating the Storm. And that's because although it's not my base case, the evidence for a decent sized pullback and quite a bit of volatility over the next few weeks can't be ignored. For one, although we've seen a bounce in global liquidity recently, the downtrend we've had over the past few months should still put some pressure on Bitcoin because Bitcoin tends to lag whatever we see in global liquidity by 2 to 3 months. We've also entered a 2-month debt issuance suspension because the US federal government has hit their debt ceiling, so we will not see additional debt issuance from the Treasury until about mid-March of this year, and this is going to put a downward pressure on global liquidity and Bitcoin potentially as a result. We also know that inauguration seasonality tells us that it's normal for markets to consolidate and correct after inaugurations, kind of like a buy the rumor, sell the news event pattern before we can really start rallying higher after investors took some profits. And although this historic 90-year trend applies to the S&P 500, we know Bitcoin and the S&P 500 are quite correlated as risk assets, and if the S&P 500 corrects, Bitcoin tends to correct more aggressively, and when the S&P 500 rallies, Bitcoin tends to rally a lot harder. So we have to be open to the possibility of a pullback or something catching us off guard because of this falling liquidity and inauguration seasonality. I know many people don't like it when we talk about multiple outcomes and would prefer if we just pretended like we were certain that markets have to rally higher because of all the exciting narratives, but being prepared for volatility and pullbacks is one of the best ways to manage emotions during the mania phase of the cycle when everybody is either panic selling or FOMOing in aggressively because of excitement or fear. So I'll be watching this bounce in global liquidity very closely to see if it's just another bounce like the one we had in December before it eventually rolled over, or if we can continue higher here. And of course, a lot of that is going to rely heavily on what the US dollar index decides to do. It has been going down ever since Trump's inauguration because of discussions of tariffs being implemented, but we don't know if this is just a pullback like what we saw in late November, early December before a move higher, or if it's actually rolling over here. And the first sign of this being a local top before a downtrend would be losing the pivotal level of 107.50, which was our previous local high. And what the US dollar index does next is going to rely heavily on Fed rate cut expectations. The market is still pricing in only one rate cut for 2025. I think the market will price in more eventually, and that's when the dollar index will react. But as of right now, the market is only pricing in one because the labor market data remains pretty decent. And even though inflation is remaining stubborn, it is going sideways and perhaps getting ready to downtrend, which is not giving markets a lot of reason for concern quite yet. But the market is not pricing in more rate cuts in case we end up seeing a resurgence of inflation. So we'll continue monitoring the inflation and labor market data quite closely. So for now, my base case remains that Bitcoin should and will rally higher, but I'm mentally prepared for the potential volatility and pullbacks that could occur as a result of macro uncertainty. And that's why I still have this green area laid out as a possibility for Bitcoin in case we see that deeper correction and in case we see that post-election CME gap filled. We have always filled those gaps in the past, especially over the past 4 years, but sometimes they can fill immediately within a month or two, like we saw in April of 2021 or in January of 2023, but sometimes it takes almost a year and a half, which is why I'm not convinced we have to fill this gap before putting in our cycle top, but I do believe it gets filled in the next bear market if it doesn't get filled in the next few weeks, but it's still something I'm monitoring as confluence with that possible region we have laid out over here. So if my base case is that Bitcoin will grind higher, but I'm still trying to be mentally prepared for the possibility of a pullback, what am I doing with my portfolio? I still have the majority of my spot holdings, and these are positions that I know won't be beat up too bad in a pullback, and I still have my cash position to reduce the volatility in my overall portfolio. I did talk about the profits that I took Monday morning in Monday's free weekly report, just because my cash position was on the lower end of my 30 to 40% allocation goal, and I could not pass up the opportunity to lock in some small profits after we saw the President of the United States launch a meme coin on Solana and had it go to over $70 billion in market cap in under 48 hours. And Bitcoin is still well above where I would be interested in buying any or using that cash and deploying it into accumulating any Bitcoin, Solana, or Ethereum. It's incredible the performance we've seen with Solana recently. So taking small profits along the way is my priority, and I'm not interested in buying Solana, Bitcoin, or Ethereum at these prices, but I'm still optimistic for what the future holds. We're seeing a lot of excitement surrounding Solana since Trump chose it as the platform for its meme coin, and it was able to go to such a large market cap on Solana. And we saw that excitement for Solana very clearly in those Google search trends we looked at for buy crypto and buy Solana. So I still remain quite optimistic on it for the remainder of the cycle. Now, Ethereum is a bit of a different story. I'm still hopeful that it can recover, but it continues to take a beating, and it feels like Solana is taking away a lot of its use case and a lot of its narratives and demand. We're seeing right now that the Ethereum Foundation is fighting with each other and arguing over the path forward. I'm still optimistic that these new staking ETFs could be a nice catalyst, and I've seen Ethereum turn it around in the past, so I'm going to continue holding my existing positions. So we'll see what happens. I'm still optimistic as long as Bitcoin is closing weekly candles above 100,000. The first warning signs would be a loss of that level, but market sentiment doesn't seem too crazy right now based on these price targets I'm seeing. People are calling for 122K. Some people are calling for 130K. I tend to get a little bit more concerned when all of these articles and everybody on YouTube and Twitter starts talking about 500K or $1 million per Bitcoin this cycle, but I'm not seeing that as of right now. As for traditional markets, we're seeing a strong rally to kick off the week for the S&P 500 as it approaches price discovery, and that's the exact backdrop we want if Bitcoin is going to continue higher as well. And I remain bullish on those two risk assets in the medium to long term because I think these federal deficits are only going to get worse. Yes, we could see some volatility because of the pause we're going to have over the next 2 months because of the debt issuance suspension as the federal government sorts out this debt ceiling issue. But as we look forward, the trend for these deficits is very clear and they're only getting worse, which means more exponential debt growth, which means more exponential money supply growth, which is a bullish backdrop for our risk assets like the S&P 500 and our fixed supply risk assets like Bitcoin. But anyway, let me know what you expect. Do you agree with my base case that Bitcoin should grind higher here, or are you leaning towards the probability of a pullback being the more likely outcome? I do think it's a bit of a tough read in the short term. You have very, very strong arguments for both scenarios. So all we can do is position for the one that we think is the most likely, but still be on the lookout and still be mentally prepared for the alternative scenario. But anyway, as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.